Over the past 2 decades, the Asia-Pacific region has served as an engine of growth for the global economy. From the emergence of China as an economic powerhouse to the rise of an Asian middle class, powerful demographic trends propelled the region to world-beating growth and also allowed it to largely sidestep the effects of the global financial crisis. But the recent combination of a slowdown in China's growth and the winding down of quantitative easing has resulted in increased hot money flows and volatility in foreign exchange rates. The turbulence has raised concerns about regional and country-specific economic growth. The result? APAC is no longer a one-size-fits-all growth story.
There's a lot of volatility in those markets, and between India and China and the ASEAN countries, we can see that actually there's a great divergence in the economic growth story.
We are in a between world where the Asian economy is pretty much left to their own device in order to find the source of growth. So this leads to a big divergence.
First and foremost, we call for a lot of policy stability and predictability. International investors love to see continuity within the markets, and they like to see consistency and great degrees of transparency.
You can have a country like Philippines, which have better political stability, have done some reforms, and likely to see a very strong growth of 5, 6, 7% a year. On the other end, you have countries with its own domestic problems, like political problem in Thailand, which is likely to cap growth and make it only see 2 to 3% growth each year.
Our focus right now, both at the government and central bank, is to maintain macroeconomic stability. We need to revitalize our manufacturing sector, and we need to find the comparative advantage of our nation. But I think the next leader should address the long-term issue, which is the structural reform.
What is important is the growth rate to revive, investment has to pick up. And for investment to pick up, what is needed is public investment should go up.
Certainly from our point of view, the better Australia does, the better New Zealand does. And I think if we do a good job of our own domestic competitiveness, in both cases getting fiscal policy right, then we can do pretty well out of servicing that growth across Asia.
Korea, obviously, we used to be very manufacturing and export driven, but as you know, recent very rich cultural elements coming in. Korea can be the leading force, really encouraging more and more Asian culture to lead the Asian Renaissance.
I think as the economic growth is slowing down, it will be a drag on the economic growth for the regional economies. That's not a good news for our neighboring countries or for East Asia, Southeast Asia countries. This is a foreseeable short-term pain, but this is what we have to bear. In order for the Chinese economy to enter a new phase of growth.
We started seeing more tangible apparent risk in China. For example, very much overheated property and real estate market, and also there's a shadow banking issue as well. So therefore, what's important is to acknowledge and realize what kind of problems are there. And in order to do that, I think China needs to capture the accurate data and disclose those data and ensure information transparency.
So rebalancing of China in a very smooth and systematic way is very important for India because it's just across the border. If China does well, we'll benefit.
Japan is a massive unknown factor in the Asian economic story. Of course, the risks are that we don't really know at this point in time how long the reinflation story will last and whether or not Abe's going to be successful with his third arrow.
That if Abenomics policies were to work in boosting the strength and health of corporate Japan, then that will lead to more FDI into ASEAN economies. And the key is because ASEAN economies are the production basis of the Japanese companies anyway. So you have countries like Thailand and Indonesia who benefit from greater investment, especially in automotive cluster, which is already strong in these two economies. The other aspect being if Japan also have a stronger domestic demand, if Abenomics would work in reviving some of this consumer spending, investment spending in Japan, then that will also benefit some of the Asian economies that export a lot to Japan.